Hello, good evening. Hope everyone's okay in this horrible market. So, we've had a big pullback today. Oops, I'm just gonna kill the sound. There we go. That's better. This week, I think we're gonna have a tricky couple of days ahead of Wednesday. Wednesday is the Federal Reserve rate decision. I don't think we know they're not going to do anything on rates. They've made that very clear, but we're expecting the taper announcement, where they pull back on all of the stimulus that they've done for COVID, to stop basically inflation, to cool down everything. Now, he's made it very clear, the signalling for months now, that tapering is coming. But what the curveball that's been thrown in is really Omicron, one, which may cause a delay to the taper. And the other thing, which has happened really since we knew about Omicron, but probably not how widespread or fast it was the testimony before Congress where he said he may double the rate of the taper, in other words, do it quicker to get ahead of inflation. So whereas everybody thought, before now, everybody thought kind of it was pretty much what nailed on and what rate. Now it could be delayed, but it also could be, if he's not too worried about Omicron, it also could be speeded up, which would be very bullish for the dollar and therefore a little bit rough for all those things priced in dollars. So let's take a look. Today we have had a little bit of a pullback. I thought that this whole I'm quite bullish, the S&P. I do think that this is potentially, a big wave 4 place, and potentially we're going to do a little bit like Bitcoin, where this is the first leg of a correction, rally to a lower high, and a second leg lower, and so a third leg total. And this third leg, so if it's an ABC, could just be 61.8 of the first leg, and it could also end up being a big kind of equal measured move and a slightly new low. We could have quite a rough end to the year, if you like. So I'm not sure how it goes. For now, though, we haven't really broken the uptrend. If we look at this, we haven't made a new low. If we use fibs to calculate our uptrend, we haven't broken the 236 fib from this low to high. And in fib terms, that's what would signal a bigger reversal. If we look at it on the forex or the daily, the S&P really likes a 38.2 fib retrace and a 786 fib retrace. So if this is just going to be a shallow pullback and a correction back to this daily 20 moving average ahead of the Fed, back to 50% of this big green thrust candle, that would be a really good place to look for support and still keep us in an uptrend rather than this bigger correction. So I'm feeling things a bit weak. We've still got 2 days to get to before we get to the Wednesday Fed meeting, and I think if we see some more de-risking, that we could see this a little bit lower, and 46.34 would be the next place. I can't, the volatility in these moves really since the end of November has been crazy. The only way to kind of manage your risk is to trade smaller, I think. A 50, I remember when if you got 50 S&P points move in a week, then you were doing really well. But we've lately, we'll have periods where it goes quiet, but we'll also have periods of massive volatility. And you have to recognize when that's, coming, and manage your risk accordingly, because it can get pretty ugly out there. So that's what I'm seeing, de-risking ahead of the Fed meeting. December's not always a very good month. A lot of institutional money moves to the sidelines ahead of the holiday. Especially if it's been a really good year, you kind of want to protect your profits and don't want to give them all the way back at the end of the year. Certainly that's how it works in a lot of funds. So, I think people are going quite carefully, and if it starts to get ugly, a lot of people will move to the sidelines. What that'll also mean is it'll be quite thin liquidity if you're in crypto over the Christmas, New Year holiday as well. So that's where we are, holding support from now. No new lows, but potentially another at least 30-35 points lower before we find support for the S&P. How about the dollar index, which is the other big driver? Well, one of the things about the dollar index is it did seem to me we were going sideways at a big resistance level. If we look at the weekly, this was our resistance. This is where I was expecting. If this is a wave 1, 2, 3, 4, this is the level where I would expect it to come from. So if the Fed is going to delay a little or punt, and we see some dollar weakness, you know, this is the sideways range where I'd expect it from. I wouldn't be expecting too much, though I would be, if we take this swing, 38.2 would be normal. That would be back to 94. I think if we got underneath this low here and this high here, then it's not so bullish and all bets are off, you know. But 94 is, for me, the first most likely place if the Fed disappoint or hesitate. So otherwise, you know, back to this weekly 200 moving average, just a shallow pullback here this week, that would be a really good place too. If we were to just say, you know, 3 waves lower, something like that, and then on we go again. So that would give us a bounce that we're looking for as well, potentially in crypto. So what about crypto? Let's take a look at Bitcoin. Now, I'm going to start with the US dollar index. I'll look at the futures as well, because we finally hit our level today in the futures market. And remember, the futures is really big volume. You know, it's as big as all of the spot markets. So it is important that we hit the technical levels. I think sometimes that, in fact, that the futures, the CME futures I'm talking about, is a little bit more technical than sometimes spot. So if we're looking at this as one big 3-wave correction, then I've measured from this high, need to put my little magnet on, to this low. Our support is this 61, where we are 61.8 of this high to this low. That's the first place we would look for support. Our daily 200 moving averages here as well. That's a really good trend guide. That's where you always kind of, when you reverse, look to come back to. So this level here, 47,000, is pretty important support. If we lose this 47,000 support, I haven't measured it quite right, it's actually 46,600. So 46,600 is really important support. And we tagged it again exactly today. And we tagged again that 200 moving average exactly today. I don't think that we're going to break this support until we hear what the Fed have to say. And if it's going to break, that's probably when it's going to happen. I'm not going to rule out having a little look underneath. If we get underneath 46,600 and it becomes resistance, so we can't get back above it, there is potential that we have a really ugly end to the year and down to 32,800. Big picture on the weekly, for me, if we are counting 5 waves from December 2018 low, this is still wave 1, wave 2, wave 3 and wave 4 with this price action, and we've still got another, I'm still bullish because we've still got another big wave 5 to come, you know, which can extend a really long way. So that's where I'm looking for, and honestly, that's a great, I've got it in log scale, but that's still a great buying opportunity. However, I wouldn't be surprised at all if this sort of 46,600 level support holds. Weekly 50 moving average, daily 200 moving average. There's quite a lot to like here. But if it does get ugly into year end, that's where my orders are going to be, down at 33,000. So that's what I'm looking at for Bitcoin. So at the moment, holding the low. Let's take a look at the CME futures quickly. Sorry, I'm typing it. Having a brain fart day. Bitcoin futures, here we go. Now, we are sideways also at the 200 moving average. These moving averages don't always quite line up because of Bitcoin closing at the weekend. But for the first time today, you can see we tagged that 61.8 low level. So now in the futures, we've also hit the level that we kind of needed to hit. It's 46,660 in the futures. So yeah, only just tagged it last couple of hours. So now I would expect us to see if we can build a base here over the next couple of days. And if, as long as we don't break it, there's a really good chance we rally from here. Now, it might be, in a couple of years ago, as you know, I'm going to go back to the spot chart now because I kind of like cycles to be similar in price and time, or price or time. So sometimes you correct in time instead of price and they're equal. And one of the things that I was looking at, for me, when I measured the timing of this correction here, that we, no, not this one. Here we go. I'm going to go back to log scale. Okay, so when I was looking at this correction in 2014, 2015, and I measured how many days it was, and I applied it here, I was expecting us to make a low in January, around the 20 something of January. And in fact, the low that we made was in December, and then we came all the way back and retested it in January. So if I look at timing for now, let's go back. So that worked really well, you know, using those projections. If I go back to the daily now, and let's get out of log scale, sorry. So if I measure this wave 2 that I think we did and how long it took, so we go from the high, we just do it roughly here, but you can do it in terms of number of days. So if I do say, so that was our wave 2. So if I'm looking for our wave 4 here to be equal in the same number of days, that puts us making the low, or it being over, the correction being over on the 27th of December. So it could be that we rally from here and the 27th of December is like 2 weeks away, and we end up doing, you know, a deep pullback retest at the end of December. Or it could be, you know, we make, you know, we do one of those Bitcoin retests of the lows where we come, you know, we rally and then we come all the way back and do one of those, you know, false breakdowns, something like that, at the end of the month. So I'm not rushing at the moment to buy here, and I don't think a lot of institutional money is as well. And sometimes it's better to, so although I think that this is a really good place to put my toe in the water this week, if it holds after the Fed, I'm not going to go all in, and I think I'm going to wait for the pullback towards the end of the month to add to it. So if it holds, that's what I'm looking at. So Mole Far says, you guess the Santa rally isn't happening. Well, Santa rally is due to happen in between, it's supposed to happen in between Christmas and New Year. So that would be between the 25th and the 1st, or the 3rd, the markets will come back, 3rd of January. So actually that would work really well with this 27th of December turning point. So we could still get the Santa rally in between Christmas and New Year. And it is really thin, you know, it's really thin it's really thin volume around that. Volume's really low right now, but that is typical December. A lot of funds and institutional money that's they're protecting, they're in protection mode right now. They're not piling in. And even if, so I do think that we need to be a little bit careful year end, and that's what I'm looking for, really. Now, this looks like we've hit our target today in Bitcoin, and it looks like we've hit our target in the CME futures. One of the things makes me think that we've got more weakness to come is ETH. If we're doing the same pattern here in ETH, we have not hit our first kind of pullback level. So if this is our first leg of correction and this is our B leg and we're doing a C leg, and this down here at 33,223 is where this would be 61.8 of this swing. And this is also where the 200-day moving average is. And when you get this bearish cross of your 20 and 50, that 200 moving average is where you look to go back to. So, you know, we're still at 3,800. And I think ETH has further to fall. If we take a look at ETH Bitcoin, and now, if we were going to keep going higher, support should become resistance, and we have failed to do that in ETH against Bitcoin. We should have, when we got above these previous highs and this 61.8, they should have been support when we came back to retest, and they haven't. So ETH is continuing to, this feels like a little bit of a false breakout, and ETH is continuing to underperform. So it may be that we lose that in ETH and we still hold the level in Bitcoin, but that says to me that it's not quite over. So Ethereum is not so bullish, unfortunately. It's one of those ones that you kind of look for to turn first. Litecoin is another one that you very often see turn first. Litecoin is not back to where you kind of need it to be either. If this is our first swing of correction, and then our B leg ABC, let's line this up. We've still got further to fall in Litecoin. That's like one of my bellwether leading indicators. 113 and back to the 200 moving average in that one. So it is very low volume. People are trading very carefully, and we should be trading the same. You know, when you look at altcoins today, like everything, almost everything is in a downtrend correction pullback, and most of it is going further than we thought. So we do need to be a little bit careful. There's a couple of charts of interest. So sand is the first one. Why? So if I'm looking for a chart that I think has a good level to bounce from, ready to maybe make a turnaround, sand is one of those. So let's look at the daily chart of this. Let's have a little bit of a tidy up. So you can see this one in terms of daily moving averages is still in a really nice uptrend in sand. Lots to like. Fib levels. This is the fib level I was looking at for support. If we hide this and we just, I'll put regular candles on, and we just look at this most recent swing, then most recent sort of 5 wave swing, so that would be 1, 2, 3, 4, 5, then 50% back, or 61.8 is where you want to see it come back to if it's going to stay in an uptrend. And if we look at where we are, that's exactly where we are, in between the 50 and the 61.8. So we're in that golden ratio zone for sand and around this 20 moving average. But even this one, which is right where I want it to be, is stuck underneath that 20 moving average. Couldn't rally back above it today. So for me to want to get excited about this one going up again, it's got to get back above that 20 moving average and hold above it, and it's not. So one of the best performing coins today was Sushi. Let's take a look at Sushi. I think Sushi was like I don't know, what was that, last 7 days, it was 3.9%. It was a terrible day, really. So this one is bouncing for me off a really good fib level potentially, but no reversal of trend. This is all sideways. In fact, this looks like a bear flag, and so almost nothing in the altcoin world for me looks like a good buy at the moment. Everything looks sort of really tricky and like it's got further to fall. Even Haven, everyone, somebody said, oh, if Nick's looking at Haven, it must be a bear market. I'm not going to look at Haven. Even at Haven, I feel like has potential for one more leg down. Let's, Here's Haven. So if your fib retrace levels are like a staircase, you know, we bounce from each one, next one becomes resistance. This 786 fib, which was support here a week ago, now we're underneath it. This is what I mean. We don't want to see with Bitcoin in these levels. Underneath it, it's now resistance. Underneath this 200-day moving average, now resistance. So the next support level, unless we recover this, for me in Haven is 4.58 in US dollars. So further to fall for that one, unless we can get back above 6.34. So nothing. I'm going to answer requests, but for me, I think we should probably do this again on Wednesday after the Fed, and we'll see how we go. So somebody in the group asked for RLC. I think just checks LRC, not RLC. LRC. My mistake. 1 second. And then yeah, we'll look at those. So I feel like, yeah, let's do it all again on Wednesday night after we've had a shakeout, and we'll see where everything is then. I can't find LRC. I didn't have it ready. 1 second. I'm going to start with this one on the weekly. I haven't got my prepared chart. This, any way you look at it, looks like a big wave forward, doesn't it? So we've got a 3-wave correction here, and then wave 1, wave 2, wave 3, this is wave 4. In wave 4, you'd normally look for 38.2 or 50% correction. This was a very extended wave, and here we are sideways in the middle. So our support is this 61.8, and our resistance is this 38.2, and this is one of those zones where you tend to go back and forward, working it out with the 50% pivot level in the middle. So 2.144 is going to be like our pivot level, where we are likely to bounce from. And if we look down, we've also got the daily 50 moving average. So this, if this is going to bounce, it would be a really good place. The problem with wave 4s is they can be like triangles, declining wedges. What if this was a declining wedge and it was going to be 5 waves? Because as long as we just don't come back to wave 1, you know, we could do that here. We could very easily do one of that, or even something more complex where in fact we have ABC in this third wave divides into 5. So this would be A, B, and this C leg divides into 5. 1, 2, 3, 4, 5. We could even do that to get back to this 200 moving average before we go off again. So we need to be a little bit careful in LRC. At the moment, this is not a downtrend. We are sideways at our 20 and 50 moving average. We could, I could be completely wrong about this. There's so many variations of what we could do. And we could in fact find support here at this 50% level. And this daily 50, this would be the ideal place. Turn up from here, and that would be our nice long entry back above, confirmed back above that 38.2. So LRC isn't reversed or broken down yet. In fact, this is a pretty nice place to come back to in a correction. We've made a very nice 3-wave correction. So it's my main problem with that would be this actually this wave 2 was irregular, so we could do that here and just rally from here. So just like Bitcoin, where we're sitting on potentially ideal support, in LRC we are also sitting on potential ideal support at 2.14 here in the middle, And in fact, you know, when you do that reversal at a 618 38.2, very often you come back to the 50% in the middle before you go up again. So for me, this is ideal place just to make a base and turn higher if it was going to. The problem is we've literally just got here, haven't we, in the last couple of hours? And so we have to wait and see if we are, and if we can do it or not in LRC. So potentially great place for support. We could also come back, you know, if we're passing time, we could also just come back to the 61.8 double bottom. That's a very crypto thing to do, isn't it? Double bottoms, double tops. So, but I would say whilst we're in this box, it's not a disastrous reversal. If we came, I'd probably be, you know, I'd be stalking an entry here. It's just if everything else gets wrecked, it can drag it down with it. Okay, can I look at AVAX, Benki, and CRV? Yeah, so let's see AVAX, which I did look at earlier. Hold on one second. I'll just do it here. I think like a clean, don't mind a clean chart to start. Okay. So a chart tidy up. So we'll start with our weekly chart. This is another one where if we measure, I feel like this is one. Potentially 1, 2, 3, and potentially actually this was irregular here, and so this was A and then funky. So either way, yeah, this one has come back a little bit further than I would like, to be honest, if we are in that fourth wave scenario in AVAX. In fact, if I come back and count this as a completed swing, we're back at sort of 50% of this swing. That's very common to come back to in a correction. So just like Bitcoin, just like LRC that we just looked at, this is just sideways, flat daily moving averages at kind of one of those levels where we could see a decent bounce. Because if we put all the fib levels in, this one has been going down it like a staircase. Clearly, if we lose this 50%, then we're going to look for this 61.8 next at 61.92. 61.92, if we take our time to get there, we could also by then, you know, say hi to the 200 moving average. Remember, all the time that we are underneath the price, we're moving higher to get together. So I'm looking for 78.16 to hold, and if it doesn't, if we break underneath it this week, then 61.92 next. I don't know if this is going to hold or not. There's a few things that we could say about it to make us more confident. So if I see an equal measured move, I kind of really like that as a look, you know, for a sign that this should be the low. And if we look at this is exactly what we've got. This swing lower and this swing lower are equal here. Now though, you see how we've kind of held on at this equal level and suddenly we're underneath it. Not only that, but on this 4 hour now, it's resistance. If we lose 78.16 as well, which we will close underneath it on a 4 hour, I think that we're going to see that bigger thing lower going on. So important support at 78.16. Let's see if it can hold on. And if it goes lower, I would probably lighten my load and buy it lower. If you're looking for a short, you know, breakdown of that measured move would be a good look. For another swing lower, let's go back to the daily. The target's going to be back to 61.92, if not these lows and the 200 moving average. So CRV got a little bit further to go. Let's look at Benki. I think I've got Benki here. No. Okay. Let's look at it against Tether. Okay. Didn't manage. You know, when you're always looking for it. If it goes above here, we'll see more. And I haven't looked at this. So let's put my fibs all the way down here. Not that I think that they're helping. You know, this failure at the moving averages in this one also points to lower and a nasty declining wedge in this one as well. So there's our lows. There's our highs. Now, I think that there is potential for us to rally and make a third touch of this trend line here. Then we would have 1, 2, 3, 4, A, B, C, D, E basically. So we need 5 waves. We need a bounce and then another leg down. In these triangles or wedges, very often the relationship between the fib bounces keep the same. So if I go from this high to low and this rally here was to the 50%, then that's what we'd be looking for in this swing. So we'd be looking for a 50% bounce, which would put us up to here. So maybe I should widen it out a bit carefully. And then lower. So without being new lows and everything going flat, I think that there is a good chance that we bounce here. But then that trend line would be our first resistance. People in Elliott Wave, they like to make parallel channels. If we were going to do that, then we would clone this lower channel, put this on the high here, and then that would be our upside target. So it may be that we get to our 50% in a kind of slow like this. But only a kind of breakout from it would get me really kind of excited about being bullish. Otherwise, I think we're sideways in a really nasty downtrend in key at the moment. I had been very excited about this one because, you know, normally if you get above your 50 moving average and then you make a new high, that's normally a sign that you're on your way. You know, and I thought that we was finally starting to turn things around in this one. And I also got quite excited when we reached the equal measured move of this correction and thought that we could do something from there. So the 61.8 here, but we didn't. So still lower for this one. One of the things as well, this is the opening low. So I'm not looking at this low, I'm just looking at this opening low. That becomes one of those levels where you come back to. And so imagine that you bought this and now we're underneath that opening range. Now you're thinking this is going to hell. So any rally back to this opening price, you're going to sell it, and that's exactly what we saw here. So if we want to know what price says for sure we've reversed and we're going up again, I think if we can close above 0.1741 and this high here, that would say that, because we will have regained that opening price problem that we've got from here. So still in a downtrend, looking for a retest of the lows and a base, and this one potentially lower, I think. In key, CRV, let's see CRV. Save that one. I'm going to go to the weekly. So one of the things that makes me a little bit nervous, so I'm going to hide these fibs, but basically this is, any way you look at it, 3 waves, isn't it? 1, 2, 3. If this was impulsive, we wouldn't be back underneath these highs here. And so because of this big 3 wave on the weekly, I would be looking for big 3 wave correction before we go up again for a pullback. And because of how long this took, I would say, you know, probably a third of this in time. So for me, especially losing this 61.8 level here at 3.725, you see, I could make an argument that this was wave 1 high, and as long as we held above it, you know, we're probably all right here. But this failure here, again, at this equal measured move level, makes me not feeling terribly good about this one. Now, sometimes it could be wrong. We haven't really closed the week underneath it. If we were to find support here, turn higher by next Sunday, close back above 3.75, I wouldn't be so gloomy. If we could hold these weekly moving averages here, I wouldn't be so gloomy. But right now where we are, it's not looking so happy. And that 3 wave structure makes me a little bit nervous. So that's what I'm thinking. So daily chart, bearish crossover moving averages. If we retest the lows and this 200 moving average and hold it, and then bounce back quite smartly, that would be a bit of a better look. But I just don't think there's any way you can argue that what we've done in the last year in CRV is bullish. Or impulsive. It's choppy and overlapping. You know, in terms of gains, it's enormous, obviously, but that's crypto. But it's not, for me, a really bullish structure. Okay, Luna and PYR. No problem. I think I have Luna right here. Let's look at the okay. So I'm just going to tidy up my chart here. For me, I had trend support and Fibonacci support. So if this is a big wave, 1, 2, 3, the 236 fib was our trend support. That was 60.74, and we've broken underneath it today. We were holding it very nicely over the weekend, and then today's ugly price moves have put us underneath it. Not only that, but they've put us underneath this 20 moving average. Now, sometimes, if this is not the pullback that we're looking for, and this is not this pattern complete here, then just 50% of this swing would be the next place that I'd be looking for. 50% or 61.8 of this swing would be the next place I would look for support. Broken the 50s, so 61.8, so that's not working so well. So I'm going to go back to these lows again, and we'll look for the 38.2, because I think that's probably the next support, especially with us bouncing first off this 61.8 level. If you look here, we had this lovely big bounce off it. That kind of validates that. And so the next is this spike low here at 49.88. But if we were to make a big 3-wave correction here in Luna, we're going to go just a little bit beyond that, aren't we? Down to 48.15. So I think between 48.15 and 49.88 is the next potential support for Luna. And if you don't like that and you want to get out, then a back test of 59, a bounce back to 59 would be where I would sell and then watch for it to go lower. So that's what I would be watching out for. I would expect that level on a bounce now to be resistance. These lows, I would expect 59 to be resistance. Bounce and then carry on lower. Matic, yeah, Matic. Some, you know, this is what we're looking for. PYR, I was watching this one this morning. I just thought, wonder if we can do this. But you see how we see yesterday when we looked at this. I looked at this in my group last night. If we could break above 31.93, we were looking quite bullish last night. I thought, gosh, this has got a nice shot at a next move higher. You know, we're done on our way back up again. But unfortunately, this closed underneath the daily 50, says a bigger correction to come. Now, normally, if we're going to stay in an uptrend, where are we going to look for next? These lows, aren't we? That would be where ideally we would like to see, because then we are still in an uptrend. This is the last swing before the most recent high. So that's where around 16.3. Let's put our fib on and see where that 236 fib comes in as well. Or 61.8. Yeah, I see. So if you lose, having bounced from the 61.8 for the first time, let's get out of log scale. In a correction, if your first swing is to the 61.8 and then back to the 38.2 like this, if your second swing gets down to the 786, and these two swings have a relationship, it's usually a Gartley pattern, which is quite a bullish pattern. And if we did this, you can see that's where our 61.8 would be. So why have I put it from this high and not this high? Because I think this is A, B, C. And so you put it from the top of the C leg. So somewhere between 11.4 and 12.6 is where I think that we're headed back to if we break 19. So a retested 19 potentially is support. I think even if I've measured that wrong there, we've still got further to fall. You know, sometimes you just, let's go back to a 4 hour. It's possible that this is just the first of correction pullback and we do another leg before we go lower. So it's going to be about these lows. If we break 19, we're going to go down to 12. It's not a good look on the daily, unfortunately, losing that 50 today. So what about when we bounce? Because we're starting to get a little bit of a tail here, and we have found some support, you know, for the last 12 hours, haven't we? So back above 25.14 would be bullish. So we've got this sideways range, haven't we? Basically, back above this. And these lows come from all the way here, look. Back above these lows would be bullish. Back to the top of the range, and then above this top of this range here, we should fly. So if we get back above 25, we're going to retest 32. But if we fail again at 32, still bearish, I'm afraid. If you know, I think if you had some and you wanted to sell some back to 32 might be a bit of a gift in PYR. This is one swing and then a shallow bounce. We've still got a bit more correction to come. Yeah, you know, it's still a sideways range, but this daily 50 might be trouble now. So, you know, those people hoping for back to the top, this is what we've got to get above. So, okay, let's finish with Matic, because let's see what's going on there. So let's start with the weekly. And I'm going to put regular candles on because if we look at it on a weekly basis, we could not close above. So if this is, we want to know, is this a new upswing, or is this kind of an irregular correction at an equal measured move level? So we've gone 1, 2, 3, a 3-wave correction, and then 1, 2, 3 back. And I'm afraid I think just a bit like Bitcoin that's what we're looking at. So an irregular correction. So let me explain that. So yeah, so normally a correction's a three waves. So say we're in an uptrend, you have three-wave correction and you carry on three-wave correction, right? Sometimes in an irregular one, so your three-wave correction looks more sideways like that and you carry on. And in an irregular one, you might even make a new high and then do that and carry on. And so this irregular pattern here is what I think we're looking at. So 1, 2, 3. Right. So now we measure the, and sometimes they go to the 1272, sometimes you go extend to 1.618. So at the moment we're sitting on the equal level. So potentially we could be finished here. But if we continue lower, I'm looking for 1.59 and the weekly 20 moving average. And if we look at this weekly 20 moving average, what lovely support it is, a pullback to that would be a very nice place to buy Matic. So potential support here where we are at 1.8. And if it fails, we go down to 1.59 in Matic. But I completely agree with you about that, about the weekly 20. That's what I've got, what I like very much. So yeah, let's see if we can do it. Okay, bye everyone. I might do a live Wednesday night or Thursday later in the week once we've got the Fed out of the way, because really everything is either people are de-risking and waiting to see what happens. So see you then.